Hey, Daniel here with Value Investing with Daniel. Thanks for tuning into this video. In this video, I'm going to show you how I personally screen for stocks in about 30 seconds or less. So when I'm looking at companies, I'm looking for a couple of things right off of the bat, and that allows me to filter things out very quickly. If I look at a company, chances are I'm able to say no to it as an investment opportunity in about 15 seconds, sometimes even quicker. Sometimes it doesn't even take me more than 5 seconds to decide if I'm able to make this sort of investment or not. What I encourage you to do as investors is to figure out, first and foremost, what your own personal investment philosophy is. So for me, what I'm looking for is companies that I can understand their products and services, that have a long runway and a lot of room for growth, that are run by competent managers that don't use a lot of debt, that have high returns on capital, and like I say, are run by excellent managers and have a lot of room for growth and are ultimately selling at a fair price relative to the amount of money that they're going to be making over, let's say, the next 10 years or something along those lines. So for me, when I'm looking at companies, I don't look for reasons to say yes. I exclusively look for reasons to say no to an investment. Meaning, when I look at any sort of company, I'm constantly looking, all my screening techniques are designed for me to be able to say no to this particular investment, whatever it may be. So I just opened some companies here, some random. I got 3 different companies here on Yahoo Finance. I got Alphabet, which is Google, Ford Motor Company, and Quoin Pharmaceuticals, which I'm not too familiar with. We're going to start with this, Quoin Pharmaceuticals. And so let's say, your friend says, oh, you should check out the stock, Quoin Pharmaceuticals. Maybe it's a good investment opportunity. The first thing I ask myself whenever I look at a company or think about a company or click on something or hear about it is, what does this company do? That is always the first question that I ask myself, because I look at it from the perspective of being an owner. As an owner, I should know and understand what the company does. If I start a business, I have to understand what I'm doing. And it's the same thing with an investment. You have to understand what the company does. So the first thing that I look at, Quoin Pharmaceuticals. I'm not a pharmacologist. I'm not a doctor. I'm not a pharmacist. I'm not a biologist. I have a very limited understanding of this realm of science. So right away, as soon as I hear the word pharmaceuticals, bio, quantum, whatever, I already start to freak out and say, this is probably not the right investment for me. Because if it's something I don't understand, well, then, I really start to hesitate and say, this probably is not the right investment for me. Now, if you're talking about them making like Tylenol and they just make these things, en masse, maybe they make Tylenol. I mean, I don't think Tylenol's ever going away, so maybe they make Tylenol, something simple like that. Then I can understand that. But the first thing that I want to do is when I pull up the company, it's Quoin Pharmaceuticals. I'm already 90% sure this is not going to be the right investment for me. So what I do is I scroll down actually, and I look at what they do. So over here you can read what it is that they do. So on Yahoo Finance, I'm just using Yahoo Finance for this video. So this is showing how I screen for companies in about 30 seconds or less to investigate further. Quoin Pharmaceuticals is a clinical stage specialty pharmaceutical that focuses on therapeutic products for rare and orphan diseases. Its lead product is QRX003, topical to treat Neerathon syndrome. I have no idea what the hell that is. This is not the investment for me. Barring anything else, I don't understand the product. I don't understand it. And for me to become an expert in this area would probably take me a couple of years. So I have no intention of doing that. I just move on to something else. So that's my first screen. Do I understand what they do? The answer to this is clearly no. I have no idea what any of those words mean. And I can't learn it in a reasonable amount of time. So I move on to something else. So Quoin Pharmaceuticals is out of here. The next thing, so now I got Ford Motor Company. Ford, they make cars. I mean, that's what they do. Cars I understand. I drive a car. I know what cars are. Okay, that's good. So we scroll down, we see, what does Ford do? Oh, look here. Ford makes cars, trucks, SUVs, electrified vehicles, blah, 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 blah. This is something I can understand. Next thing that I look at, the second thing that I look at, right away, before anything else, I don't even got to get off this page. I look at here, this chart here. This chart here shows me the revenue and the earnings of the last 4 years. It's not perfect. It's not complete information, but we're talking about a 15-second snapshot decision screening technique. I look at what does the company do? The first one that we looked at, makes pharmaceuticals, some Neanderthal orphan disease. I don't know what the hell that is. Skipping it. Nope, not for me. Now we're on Ford Motor Company. It passed the first screen. I know what it does. Makes cars. Easy enough, right? I mean, cars I can understand. A lot easier than pharmaceuticals. So the second thing that I look at, now that I get what it does and I can understand it, is I look at the revenue. Revenue is not going up. It's going down and staying the same. What I want to see is companies whose revenues are going up. Up, 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 up. All 4 years. Maybe 1 year roughly the same. But generally speaking, I'm looking for revenues that are going up. I'm also looking for earnings that are going up. And with no losses. As we can see here, this company barely makes any money. I mean, they have 1 year here where they lost $1.3 billion roughly. It is in 2020, and a lot of companies lost money in 2020, obviously. But this is not the sort of thing that I'm looking for. First of all, the revenue is not going up. Second of all, it's lost money. And this year it barely made any money in 2019. Therefore, just with these two simple screeners, what does the company do? Is the revenue and earnings going up? I can say this company is probably not for me. Okay, now we're on Alphabet. Personally, Alphabet is one of my biggest investments. It represents somewhere around 25, maybe 30% of my portfolio currently. It's my big bet. It's the thing that I really believe in, and it's the sort of investment that I'm invested heavily in. It represents a big portion of my portfolio, like I say, about 30%. And I bought it when it was around maybe $90, $92 per share. So I really bought into it, somewhere around here or so in terms of Alphabet. But let's go back to our two fundamental initial screeners. All we got to know is these two things if we're going to progress further in terms of looking at the company. First thing we ask ourselves, Alphabet, Google, what does it do? It's something that I can understand. You go on the internet, you search for things, it's there. I mean, that is my understanding of it. It has a whole search network that's all integrated. You can search for anything on there. It'll give you results. And the more people search, the better the results become because it uses your search methods and words and stuff to actually make itself better. So if we scroll down, we can read what it does. And remember, this should be your first screener in my opinion. Understand what it does. So Alphabet, it says here, various products and services, Fitbit, Google Nest, Pixel phones, Google Cloud, and so on. But we know that Google's main thing, honestly, is search. I mean, that's really its big driver in terms of money, and that I can understand. And I also understand the products that it has, like Fitbit and so on. And it also owns YouTube, a platform that I obviously use a lot. So it has things that I can understand, and it passes, therefore, the first screen. Does it do something I can understand? Yes, I understand Google search a lot better than I understand pharmaceuticals. So it passes that first screen. Now we go to our second check, which is basically, are the revenues going up and are the earnings going up? So we're looking for revenue growth, revenue consistency, and earnings consistency. That is what we're looking for. That's simply my personal second screen. I don't even have to get off this page because I can look at what the company does and I can look at, are the revenues going up? Are the earnings going up? Is it growing? Is it consistent? If it is, then I can investigate further. So those are my two simple upfront screens. Takes me literally less than 15 seconds. I look at what does the company do? I look at this chart here. Boom, snapshot. I already got an idea if I'm interested or not. Once a company passes those screens there, then I can say to myself, okay, let's investigate further. My third screen, right after I do those two things, the next thing I look at is I click on statistics and I look at the debt that the company has. I scroll down here to balance sheet, I look at debt. The company has $30 billion in debt, but it has $116 billion in cash. So it basically has no debt. That's a good sign. That's my third screen. So the first thing I look at, what the company does. Second thing I look at, is the revenues growing? Are the earnings growing? Is it going up? And then the third thing I look at is the debt. Does it have more cash than debt? If it does, that's a good sign. If it has more debt than cash, can it pay off its debts, within a couple of years using all of its net income? So those are just a couple of quick screens. I'm not saying that's all you have to do. On the contrary, once a company passes those screens, then I read probably 10 years worth of annual reports. I do a whole bunch of research, other research, looking at the balance sheet, analyzing everything, trying to calculate what a fair value is for the company, roughly speaking. And then I decide, if it's an investment that I want to make. But in terms of my first initial screen, I look at three things, really. I look at, first, does the company do something I understand? Are the revenues and earnings consistent and growing? And is the debt position, does it have a healthy amount of debt, like not too much debt, or ideally no debt, and more cash than debt? If it passes those three, then I investigate further. But I can tell you right off the bat, using just those three screens alone, 99% of companies are off the table. Literally 99%. So, if our investment universe is something like, let's say 10,000 companies, we know right off the bat that basically 9,000 of them or whatever are just simply going to be like no's. They're not going to be for us. So, like I say, 99% of companies are pretty much eliminated right off the bat using this technique, and then we're left with the 1% of companies that we have to investigate further, and our further investigation will take some time. But the point is to start. This is the screening technique that I use. Do I understand what the company does? Are the revenues and earnings growing? And does it have, not too much debt, basically? I encourage you to use similar screens and to think to yourself always what other screens you could use and implement to help you determine what companies are good investments. Thanks for tuning in. Please like and subscribe.